I'm delighted to be joined by Katelynn Minott, CEO and Managing CPA, and Nick Castillo, Managing CPA from BrightTax US Expat Tax Services. We'll be discussing hidden reporting requirements and IRS amnesties for US expats. Thank you very much for joining us, both of you. How are you today?
Great. Excited to be here.
Before we start,
thanks, Hugo.
Great. Before we start, please bear in mind, our audience, that the information presented is for general educational purposes only, and you should always seek your own personalized financial advice. Katelynn and Nick will be answering your questions at the end, so please add them in the Q&A box at the foot of your screen as and when you think of them. We'll try to answer as many as possible. As I mentioned a little earlier, there will be a further opportunity to have Katelynn and other tax professionals answer your questions in a session following this one. But put them in the Q&A box and we'll get through as many as we can. So without further ado, over to you.
Awesome. Thank you, Hugo. Let me get started with some slides. As I do that, I just wanted to say thanks for the opportunity to have Nick and I here. As Hugo mentioned, we represent BrightTax, which is a online US tax firm. We serve Americans all over the globe with a brilliant team of CPAs, Nick being one of them, who accommodate a personal relationship with a CPA and their clients to provide consistency and personalization in the tax filing exercise. So we're going to start our presentation here today, which covers hidden reporting requirements and IRS amnesties for US expats. That's a mouthful, but really what it means is what reporting requirements exist in the US tax system that maybe not are obvious and not everybody knows about. And what do you do if you find out you have to file one of these forms, get caught up as a result of missing something or making a mistake in the past? So without further ado, I'll hand things off to Nick to dive right into our presentation.
Thanks, Katelynn, and thanks everyone for being here to listen to us talk about this really exciting topic and making sure we keep ourselves tax compliant. So first, I'm going to set the foundation about how and what makes a U.S. individual living overseas have to file taxes and other types of reporting requirements. Then we'll talk about the more in-depth requirements and how you can catch up if you have missed any of those. Third, we'll talk more in general about catch-up processes, and then we'll open up for questions.
Perfect. And to provide some background, many clients come to us in a situation where they've just found out about something that was unknown to them. Nick and his clients, Nick gets to hear about this every day with his clients who are setting up a phone call to tell him that this is the first time they've heard about a corporate return or a FBAR disclosure. And so having served thousands of clients and getting them caught up, this is some insight into what we're seeing every day in the world of BrightTax.
Yes, so one of the things that is surprising for a lot of Americans who live outside of the U.S. Is that if you meet any of these minimum income thresholds, then you are required to report your worldwide income on your U.S. tax return. Not necessarily do you have to pay tax on that, because of all the different rules that exist. But, if you're working in Germany and you have no ties to the US other than being a citizen, and let's say you're single, you make more than $12,950, you have to be filing a tax return every year that you meet those requirements. So I'm not going to talk about every threshold here. The interesting ones are perhaps married filing separately status. So if you're living outside the US and you're married to a non-US citizen, then you are by default a married filing separately filer, and you have to report your income on your tax return if you have more than $5 of income during the year. Similarly, if you are self-employed and you have $400 of self-employment income, then you are required to report that amount on your U.S. tax return and potentially look into submitting self-employment taxes as well as federal income tax.
Awesome. Nick, if I'm a U.S. citizen with children, what filing status do I use? And let's say I'm married to a spouse who doesn't have U.S. citizenship.
Yeah, so if you don't have a U.S. citizen spouse and you have children, then you can file as head of household, which gives you a higher minimum income threshold rather than the single or married filing separately threshold.
Awesome.
And so filing deadlines, we're all accustomed to April 18 is the big deadline where you see all the commercials of TurboTax. But for individuals who are living outside of the States during the tax filing time, like right now, they get an automatic 2-month extension from April 18 to June 15. And April 18, we're saying that instead of April 15 because April 15 lands on a weekend, and the next business day is the 18th of April. So let's say you're still you don't have your information ready. There's a lot of countries where maybe your local tax return or your local tax statements are not ready by the time it comes to file your June 15 return. We can file an extension for October 16. It's a 6-month extension if you count April. And it's similarly, the 15th is a weekend. The 16th is the next business day that creates when you have to file. If you're at the October 16 deadline, it's creeping up on you and you need even more time, there is an additional extension that can be specifically requested that takes us until December 15. And that's, you can extend pretty much your tax return from April all the way to December, buying you all the time that you need to make your filing and do it correctly.
Awesome. And perhaps worth noting that while all of these extensions to October 16th, December 15th allow you to delay the filing of your return, your tax is still due as somebody who lives outside of the US by June 15th to avoid any sort of penalties. Interest actually does accrue as of April 18th. So the deadlines can be a bit confusing in the expat world. And then Nick, would you recommend to a taxpayer the December 15th extension? Is that one that you like to file for clients, or would you recommend avoiding it?
Yeah, I definitely recommend avoiding the December 15 deadline, mainly because it involves mailing papers to the IRS. And at that point, if you're late, you get the full brunt of the IRS's penalties. So I would save that December 15 extension for only emergency cases.
Perfect. All right. So tell us a little bit about some of the commonly missed reporting requirements that you're seeing in conversations with clients every single day. Let's start with financial accounts.
Yeah. So, if you're living in another country outside of the US and your life is there, you're making payments from there, it's most likely you have a financial account in that country. And a lot of folks have accounts in countries all over the world. It's very normal for people to have multiple bank accounts. And the US has this specific rule called the FBAR that stands for the Foreign Bank Account Report. And that requires all US citizens who have non-US financial accounts in which there is more than 10,000 USD at any time during the year, then you have to file this report. And now one of the things that gets somewhat confusing with this is that it's, of course, your bank balances are fluctuating throughout the year. we have to report the highest amount. And it's $10,000 in total, not per account. So let's say you have a bank account in Spain, one in the UK, one in France. UK has $3,000, Spain has $4,000, and France has, say, another 4,000. None of them on their own exceed 10,000, but in total, they do. So that would mean you have to report all three of these accounts on the form, the FBAR form. Also, this is not just accounts that are in your name. They are accounts that you may have signature authority over. And so what that means is, if you have, your uncle in Germany gives you the authority to write checks out of his bank account, or gives you power of attorney. There's a bunch of different ways where you can have this direct or indirect control of the account. Then you also have to report that to the US as well.
Perfect. Some common situations that I've seen are people sell a car and have cash in their account, but then pay off the loan the next day. So it kind of trips that threshold, and they don't realize, because they don't think of it as money that has come in or income. And yet it trips the threshold. So, all right. So what happens if you fail to file the FBAR?
Yeah, so the FBAR is actually not an IRS created form or requirement. It's actually belonging to the Financial Crimes Department of the US government. So their penalties are a lot more difficult and painful than the IRS's penalties. So oftentimes, if you're late on making your FBAR filing, then the penalties are much higher, starting at $10,000 for just mistakenly forgetting to report the right amount or missing the deadline by some time, or you can get a penalty of $100,000 or half the value of your accounts if you personally or purposefully omits your return, your FBAR form. So, very, very penalizing fees that you can get on these. Also, each penalty accrues every year. So, if you miss 5 years of FBAR filings, then your penalty can really stack up.
Yeah, it sure can. And the reporting of the FBAR doesn't drive any tax, right? So there's no reason not to file it. And
right,
so what do we
right.
do? What if we've just found out about the FBAR, Nick, and these penalties look scary? We're not using scare tactics here, because we do actually see them very, very infrequently in practice, but certainly the FBAR is not a disclosure to miss. And so what should someone do if they've just found out that they have an FBAR filing and haven't filed it yet?
Yeah, there's this amnesty program that it's called the Delinquent FBAR Procedure, that allows the taxpayer to submit all of the late or delinquent FBARs and receive no penalties for doing that, as long as they meet the requirements. So, as long as you are filing the return and you're not under any kind of criminal or civil investigation, and if you have not already been contacted by the IRS. So essentially, you have to make sure that you report your FBARs before the IRS reaches out to you and says that you're late.
Perfect. All right, so let's talk a little bit more about financial accounts abroad and discuss FATCA.
Yeah, so the FBAR, like I said, is really generated from the Financial Crimes Department. The IRS has a similar requirement that we call the FATCA requirement, that requires U.S. individuals to report the same financial accounts if they meet a higher threshold. So it usually starts at $50,000 US for individuals living in the States. But for expats who are abroad, they get a $200,000 threshold. So if your financial accounts in total exceed this $200,000 threshold for single filers or $400,000 for married filers, then you will have to report your assets on this FATCA form, which is Form 8938.
Perfect. And how should somebody get caught up if they've not done the FATCA and perhaps in addition to not filing the FBAR, they've failed to report income? You talked about thresholds for us. And so for some people, that's a surprise to learn, oh, I've been living abroad for 30 years. I have a US passport, but all of my income was earned through a salary position in the UK. I've never filed. I'm paying my taxes in the UK. How do I get caught up with the IRS?
Yeah, so we see this all the time, and it's like riding a bike for us. The streamlined procedure is kind of the IRS's package deal to helping you get into compliance for all of your missed returns and past transgressions. So the streamlined procedure allows you to file 3 tax returns that are late, along with 6 late FBARs. So, in a case like right now, 2022 is not yet late. 2022 becomes due in June. So the 3 returns that are late are 2019, 2020, and 2021. We file those 3 and the 6 past FBARs, and we're allowed to do so penalty-free. So no penalties on the FBAR, no penalties on the unpaid taxes, as long as we meet certain requirements. Number 1 is that you are truly outside of the US during these 3 years. And the threshold for that is 330 days are outside of the US, or no more than 35 days are in the US during any of these years, any of these 3 late years. You also have to certify that your failure to file was not on purpose. It was only because you didn't know the right rules, you had bad advice, anything that is non-willful conduct. And we report that in a small essay on this form 14653. That acts as our summary and puts the bow on the streamlined procedures. And then lastly, kind of similar to the FBAR requirement, is you have to present this form to the IRS before they contact you, which we tend to see that's not really a concern. But we want to make sure that we are the ones that are beating the IRS to the punch.
Perfect. So we've talked about financial accounts, what to do if you've missed reporting income within them, the disclosure of the accounts in the first place. So now we're going to talk a little bit about investments and some of the reporting requirements surrounding those.
Yeah, so pensions can be very frustrating for our clients because, locally they're usually tax advantage plans. They're usually very simple, and the IRS wants to get their hands on it. So unfortunately, a lot of foreign pension plans are still subject to US taxation. Unlike US retirement accounts, the US won't allow you to have that tax-free treatment or that tax-deferred treatment like you may have locally. And so in most cases, we're required to report the contributions, the earnings within the account throughout the life of the account, and also the distribution, which may be taxed in different ways depending on the account, but they still require reporting. Important exceptions to this case are the US and UK tax treaty offers a lot of relief from the UK pension plans, Canadian RRSPs have very specific US tax treatment based on the treaties. And then similarly, other foreign plans like the Australian superannuation funds are considered to be trusts and have completely different reporting requirements in the US. So it can add a huge layer of complexity.
Awesome. So to put this in the form of an example, let's use a country that doesn't have a treaty with the US, Chile, where we lived with my family for many years. So if I'm working in Chile and earning income as a salaried employee, I'm paying into a pension plan as is required by their local system. And I'm not paying taxes on my contributions in the Chilean system, but on the US system, the IRS wants to see that income reported, even though it's tax deferred in the foreign system. Is that right?
That's right.
Awesome.
That's right. And it looks like a huge discrepancy when you compare your taxable income in each country, which makes it a very frustrating process.
Yeah. Okay. So how do we report this, and what would you do in this scenario?
Yeah. So, it is a case-by-case basis. We have to take a look at possibly the local country tax return, your statements for the pension, and understand the three main components, which would be the contribution to the pension, the earnings of the pension, and the distribution. Oftentimes, it's treated just like your salary or investment income, very much depending on the case.
Great. And are there tools in the US system to reduce the tax? So even if it is taxable on the US side, if it's taxable income, does that automatically mean you're going to pay on it in the US?
Oh, definitely not necessarily are you going to be paying on it. If you're paying taxes through the plan that you have, foreign tax credit may apply to you. The contributions may be considered earned income, might be subject to certain earned income exclusions that we have for expats. And the tax treaties that the US has with many of these countries do have some generous provisions to avoid double taxation.
Perfect. All right. Well, let's talk about mutual funds. This is a common investment that people are caught off guard by when filing US taxes.
Yeah. So foreign mutual funds are considered by the IRS a passive foreign investment company, which we shorten to PFIC. So a PFIC is not just a foreign mutual fund, could be a foreign real estate investment fund. It could be any foreign company that has truly passive income from rentals, interest, dividends, etc. And the US, in their very wise tools, are always trying to, in this case, they're trying to dissuade individuals from investing in funds outside of the US and potentially keeping investment income out of the US tax pool. So the PFICs are often taxed at a higher rate than regular investment income would be in the US or in other foreign investments, such as just investing directly in publicly traded companies, excuse me. But in general, any PFIC that is any foreign investment will be treated as a PFIC if its income is mostly passive income. So 75% has to be passive income, or at least 50% of its assets are held to produce passive income.
Okay, so this one gets really tricky when you're starting to set up investment accounts abroad and getting advice from a foreign financial advisor in terms of how to invest your money. And again, kind of put into an example. So if I'm investing in shares, directly held shares of a foreign company, that's not a PFIC. But if I'm investing in a fund, a financial fund, perhaps held and run by a company, a financial asset management company outside of the US, the only exception to this PFIC is if the investment itself is traded in US markets. I often see clients say, well, the pooled fund that I hold in Germany is actually made up of companies that in US stocks in US companies. It's still a pooled fund. It's still run and regulated in Germany, and therefore is a PFIC. So that's a common misconception we see in this area as well. So tell us a little bit how we file the PFIC and the US return.
Yeah, so on the US return, you are required to report each PFIX activity on Form 8621 if you receive a distribution or make a disposition from a PFIC or a sale from a PFIC. The reporting and the tax that results from having a PFIC is a lot more difficult, a lot more onerous. So it does involve usually a lot longer prep time and a higher prep fee. So a lot of times, investment managers abroad might tell US citizens to just entirely avoid foreign mutual funds and either invest directly in shares in the market or only, invest through the US brokerage firms when you're looking to buy a mutual fund.
If they don't provide that advice, they probably should. So common also for US expats living around the world is running a business abroad. That doesn't necessarily mean running a big company or a corporation. It sometimes means just setting up an LLC to run your small business. So let's talk a little bit about the commonly missed reporting requirements as they relate to foreign companies.
Yeah, this is one that we see all the time. As individuals are living abroad, they open a SL in Spain or a KFT in Hungary to run a coffee shop, or they do some consulting work, or in a lot of countries you have to open a corporation in order to buy property, and so your property is held under a corporation. This is something that has to be reported on your US tax return as well as potentially locally. We have clients that have been with us for a long time and they say, oh, wait, I opened this company just to buy my house. And it never occurred to me that it was something I had to tell you guys about. So it's really important to pay attention to this as well. Partnerships. Any partnerships that are formed legally outside of the US to do a joint venture in property or any business will require a specific foreign partnership form. In addition to this, naturally, a trust that is created outside of the US that is for a owned or trustee by a US individual has to also be reported in the US on your tax return. And so each of these conditions, each of these entities will trigger a specific US filing requirement. So foreign corporations will require Form 5471. And, that makes, well, I'll get to that later. Foreign partnerships require Forms 8865, and foreign trusts will require Form 3520 and often 3520A. Each of these forms will require lots of information regarding the entity, legal name, address, dates of incorporation, dates that individuals purchased the shares, income statement, balance sheet. It's often very rigorous reporting that also makes more reason to keep really good records of your activities.
All right. So what to do
Now,
if this is all new and you just found out about these returns, these informational returns?
yeah, it's, we didn't mention it before. I didn't mention it that failure to file these forms can result in penalties up to $10,000 per year often. So if you realize that you didn't file and you want to catch up, there's this Delinquent International Information Return Submission Procedure, which we can shorten it to DIIRSP. It's not as fun as SLP. And this allows taxpayers who haven't filed these foreign forms to do so without penalty, as long as they can, similarly say that they didn't file willfully, and that they, going forward, they will make the filings on time.
Perfect. So this procedure, would you use it for somebody who has failed to report income, or someone who's just forgotten to inform the IRS of their entity abroad?
Right. That's a great distinction. This is primarily for individuals who just didn't report that item, that corporation, that trust, the income. If you failed to report the income, then we would perhaps do the streamlined procedure instead.
Perfect. All right. So if you've never filed a tax return, there could be some good news, right? It's not all bad. As we've talked about already, we've helped thousands of taxpayers get caught up, both in informational return filings and tax return filings, FBARs, all of these things. And it's a process of gathering some historical information, and sometimes there is some good news at the other end of the procedure, right? Especially these past few years with some of the IRS relief that's been offered. So I'll let Nick share what he's seen in terms of potential refunds for clients in getting caught up.
Yeah. So one of the things that is usually, I save it for the end because it's such good news, is that in 2020 and 2021, the coronavirus stimulus payments went out to all U.S. citizens that were, let's say, on the books for the IRS. And a lot of individuals who are living outside the U.S. never filed a tax return. They should have received this payment, but they're not on the books because they never filed a tax return. Now, by filing through the amnesty, specifically the streamlined procedure, which allows you to go back 3 years, you can receive these coronavirus stimulus payments retroactively on your returns, and they come in as a refund. So if you have any tax to pay, they'll offset it. And if you have no tax to pay, it'll be cash in your pocket. So, the amounts differ based on your household. So, more or less, if you're a single individual, you have $3,200 to gain by filing and doing the catch-up. If you have children, if you're married to another U.S. citizen, the amounts can only increase. Now, how to get these, how to make sure that you have them for your kids, etc., is you have to have valid Social Security numbers. You have to file the tax return, and not only file it, but file it before June 15, 2024. Because by then, after that point, 3 years will have passed from those years, and you will no longer be eligible for the refund.
All right. And we talked a little bit about this earlier, the circumstance in which a U.S. citizen who's filing taxes has U.S. citizen children. Tell us about some of the benefits that you can obtain in filing your tax return as a result of that.
Yeah, so not only does having children get you the coronavirus stimulus payment if filed before the June 15, 2024, but every year there is a child tax credit that can potentially be cash in your pocket as a refund. So for the advanced child tax credit, this was a more a one-time credit that existed in the last for 2020 and 2021 that gives you a little bit of extra credit if you spent more than 6 months in the US. Otherwise, there is a portion of the tax credit that reduces your tax bill, and there is a portion of it that is also refundable. So, in a best case scenario, a family with 3 kids and moderate amount of income, they can be, paying 0 tax and actually getting 3 times 1,400 for each kid.
Yeah, so at least takes off a little bit of the challenge or the bad news in terms of having to file U.S. taxes. But that brings us to the end of our presentation component today. Thank you, Nick, for being so generous with your time and sharing all of this knowledge. As you can probably tell, Nick has been helping clients get caught up on these things for quite some time now, and he's an expat himself, so he's got the personal experience with some of these challenges. So.
Thank you both very much. That's an excellent presentation, diving into some of those less well-known filing requirements and how to catch up, or if you're behind. Could I ask you to stop sharing? Absolutely. And then we'll dump in. There are loads and loads of good questions. I'd reiterate to our audience that if we don't have time to answer your questions today, and we'll get through as many as we can, or in this session rather, there's another session that you can come back and join an hour later, which will have several tax experts spending a whole hour dedicated to answering your questions. So without further ado, let's dive in. This is a good one. Can a non-controlling shareholder or non-financial interest director with a foreign bank account signatory authority of non-US companies, so this is somebody who has access to foreign business company bank accounts, can they just report their company accounts on an FBAR and exclude their personal accounts from that FBAR, or do they have to include both on the same FBAR?
I would say that yes, you have to include your personal accounts that you are that you have financial interest in on your FBAR, as well as the signature authority account. There's specific places where you can say one is financial interest, the other is signature authority, and both need to be reported.
Yeah, there's also a box on the FBAR form that allows you to indicate that you don't know or aren't able to report the maximum balance of an account. So in the event of a company's account where you don't really have access to know what that maximum balance would have been, you can use that to kind of tick the box on disclosure and do what you need to from a compliance perspective, but not kind of reveal the cards of the business that you're working for, if you will.
Thank you. Here's one about another company reporting question. What is the percentage shareholding threshold ownership for a non-US company under which an expat director will not be subject to controlled foreign company reporting?
That's a great question. And very simply put, because there could be a lot of things going on, is that as long as the US individual is the only individual that owns the share of the company, and they have less than 50%, or better said, 50% or less of these shares, then they do not have to report the foreign company every year, other than the year that they acquired the shares or disposed the shares. But if the other 50% is owned by other US citizens, and US citizens control more than 50% of the company, then it has to be reported. So it truly matters whether the entity is controlled by US persons, not necessarily if it's one controlling person.
Okay, Barbara asks, is pension income taxed the same as regular income?
So it will depend on the character of the pension income. So if it's interest, dividends, capital gain, it will be treated the same way as US interest, dividend, and capital gain, with the short-term capital gains being taxed at ordinary rates along with interest and dividends. long-term capital gains being taxed at the better, more beneficial rate of 15%.
Yeah, and I suppose to add to that, based on what Nick shared with us earlier about the fact that in some cases contributions are reportable as income during the time that they're accumulating. If you've already reported contributions to the IRS on an ongoing basis, as long as you've reported them accurately and you're keeping good records, at the time where that pension income is being distributed, you have what's called a basis, which reduces the pension income that you're reporting on your US return. So that makes it really important to, especially as you're contributing to a pension, keep that inventory, if you will, of what's been taxed already by the IRS, so you don't end up being double taxed later on.
That's great. Do online accounts, this is a great one, lots of expats have these, do online accounts like a wise.com account or resolute.com account count as foreign banks for FBAR reporting?
They do count as FBAR accounts, so they should be all reported the same as any bank that you have brick and mortar.
A simple answer. And there was another FBAR question. I think we've covered that actually, about whether your business limited company account counts for filing on an FBAR, which I think it does. Okay, somebody says, if in 2022, I had over 10K in France and filed an FBAR, but in 2023 I didn't, do I have to file an FBAR the second year because I had the previous year?
The answer to that is no. You do not have to file in the second year because you filed in the previous year. By following the rules, you had less than $10,000 and you're being compliant.
So only in years where you cross that threshold?
Yes.
And another FBAR question. For FBAR, if the money in a foreign bank account originated from a US bank account, do you still have to file an FBAR?
Yes, you do. Even if that comes from the US, it's another source. As long as it's in a bank account outside the US, you have that cash sitting there, you have to report it.
Okay, here's a FATCA question. Regarding FATCA, does the $200,000 threshold apply only to foreign accounts or globally?
So when we say foreign accounts, we are referring to non-US accounts. So any financial account that is outside of the US has to be included in this. So bank account, savings, brokerage, pension, etc.
That's a good question. How is a mere mortal supposed to know if a security is a PFIC?
That is a good question. And I think the best answer to that is to consult a tax advisor to look at the statements, look at the security, and help you determine that.
Another trick of the trade is if you look at the investment, if it has a US QSIP, which is the record number, if you will, for a US security. So if that security or fund is trading on the US markets, it should have that 9-digit number associated with it. If it doesn't, then it's probably a PFIC.
Thank you. Would you have recommendations for US expats who had an IRA in the US, but the IRA would be frozen once we no longer have a US address?
That is something that I have not dealt with very much. Katelynn, can you put some input there?
Yeah, it's a tricky one. So we talked about FATCA and all of the reporting requirements and obligations that became relevant in the 2010 year when this legislation was passed. And We talked a lot here about how that applies to US individual taxpayers, right? So what that means for you all. Now, on the flip side of this requirement also impacted banks. And this is why what you see is US banking institutions find out that you're moving abroad, let's say to France, and they say, oh, I don't want to deal with you anymore because there's information exchange happening between France and the US. And that's a really big responsibility for us as a bank. It's really costly for us to comply. So it's just easier for us to shut our doors to people with international circumstances. We're seeing this also on the other side where people in Europe and other countries that are FATCA compliant, their banks won't let US citizens. They say, hey, were you born in the US or do you have a US passport? And as soon as you say yes, they're not willing to open a bank account for you. We haven't really found a solution for this. It's challenging. There's some backdoor solutions, which we probably shouldn't go on the record and say as true advice, but a lot of people are finding a way to get a US bank address or a US mailing address on those accounts, whether it be a friend or a relative, so that you can continue to operate in your bank in the US. But banks have gotten so smart about this that they're looking at the IP address you use to log into your account. So if that IP address is in France, they're saying, well, yeah, you have a US address, but you're always signing in from France. So what's happening? It's very tricky to navigate. And it's one of the biggest challenges that Americans living around the world have is access to banking institutions.
Am I right in thinking Brightex offers a solution with the UNFCU for that scenario?
That's exactly right. We have a partnership with UNFCU, which is the United Nations Federal Credit Union, where we can offer a partnership to that bank and exclusively for our clients. And that banking institution in particular is very accustomed to working with financial circumstances and international circumstances that affect Americans abroad. So that's something that we're proudly able to offer to our clients.
If you have never filed a US tax return and you don't have a US bank account, can you still get stimulus payments?
Good question. And the answer is yes. The solution is you do the streamlined procedure and you file those returns claiming the refund. And if you don't provide a US bank account, the IRS will not direct deposit the refunds to you. But you can open an account with Wise, who we do also partner with, that they will meet the requirements of a US bank, and you can receive the refunds to that account as well.
Great. Okay, another COVID stimulus question. What if I did not receive round 3 stimulus payment? How do I find out my status? I received round 1 and 2 combined. I filed a tax return, but never received round 3. What should I do?
That's a curious thing that I'm not sure how you're in the system, but the IRS is missing one of the payments. We've seen that several times. And so first of all, we would make sure that you didn't miss that the IRS did not intend to send the check, which you can do by checking your IRS account online. They can then tell you that this check was issued and then it's lost in the mail and we track it, or we just find out that it was not issued at all and you claim it on the tax return as a refund. So we can definitely figure that out. It takes a little bit of time, but that's something we can help with.
That's great. So if your child is not a US citizen, but you are a US citizen, can you still get the child tax credit?
Unfortunately, you cannot. Your child tax credit only applies to dependent children who are US citizens with a valid Social Security number.
But presumably your children could be US citizens, so you could obtain that Social Security number, I would imagine, if that was something you'd wanted to do.
Yeah, definitely. If it's in the plans to get US citizenship for the children, you can go through the process, request their Social Security numbers, and apply for the credits.
Okay. If a US citizen abroad is gifted property by a non-resident alien parent, is gift tax due in the US? And are there reporting requirements?
That's a great question. So the US rules for taxation require that the person giving the gift pays the gift tax. So naturally, if a non-US citizen is giving a US citizen a gift, they do not have a US tax to pay. However, if that gift that is received is either $100,000 or more in any year, or it's a gift of appreciable property, such as a home, stock, etc., then the US individual receiving it has to report those amounts of gifts to the IRS on one of the forms you mentioned, Form 3520. It's purely informational, no tax due on it by either party, but it is required to tell the IRS, hey, this is where this money is coming from. It's not income.
Question about small business reporting. If you have a small business that is more than 50% owned by US citizens, besides Form 5471, what other US reporting requirements are there?
That's a really good question, because on top of the Form 5471 that requires you report the information of the entity, there is Form 8992, which requires that you report the income, calculate some deductions, and potentially pay tax on that corporate profits. That's a whole discussion for a whole other time because it gets very complex. But yes, there's reporting the income, reporting any potential foreign tax credits that you might have, and putting that onto your 1040 tax return are all things that you have to do at that point.
There's a question here about online sort of tax softwares like TurboTax. Would you consider them good, reliable tools for expats? The anonymous attendee says, my dad has helped me file for my taxes, but I'm slightly suspect.
Well, TurboTax and the other free or relatively affordable tax softwares are really good. They do a really good job of hitting the most simple cases. But in a case where you're living abroad and you want to get this foreign exclusion, or you have foreign tax credits, it may be, the inputs are not there to support, that level of complexity. So you may be able to get it done, you may not be able to get it done correctly. So, it's definitely worth having a conversation with, a CPA provider that can, put a human touch on it.
One of the other challenges we've seen with software like TurboTax is often especially if you're married to a non-US citizen, it requires you when you're filing separately to include the social security number of your spouse. And if your spouse is not a US citizen, they don't have one, which leads to the necessity to print out the return and mail it. And the IRS has a backlog right now of months and months of tax returns, especially if you're due a refund. You don't want your tax return sitting in the paper mail file queue at the IRS. It's kind of a dumpster fire, literally. They've been known to burn some past filings that they've not processed. So anything you can do to electronically file your tax return, we would highly encourage.
So can TurboTax deal with expats in claiming tax credits and things like that, or not really?
I don't know the answer to that. Katelynn, I've never really used Turbo.
Be surprised that it's not designed for expats, I don't think, where things are a little more complex. But no, I just wondered. Okay, so this is a great question. If I have physical gold abroad, does that have to be reported somewhere? I'm imagining a pirate, or it could be Mr. T, I'm not sure.
I would consider that, yes, gold would be owned through a financial account. If you have, in your closet or under your bed, a few ingots of gold.
Buried on an
maybe
island,
not.
I suppose it could be.
Or that.
Yeah.
So that should
It's
be
only a financial asset if it has an account number associated with it. So, I mean, when people own gold, it's typically through a bank. And so the answer would be yes.
Right.
That's interesting. So yeah, physical, and that's reporting on an FBAR. So physical assets, metals. Does that extend to kind of art, jewelry, those other assets, or only if there's an account number, I guess?
Yeah, only if there's an account number.
If it's through an account, yes. Cryptocurrency is not reportable yet on FBARs, even if it is owned through an account. So that's the important tidbit.
Yeah, well, that's nobody's actually asked, but I'm sure that's relevant for a lot of expats. So crypto isn't reportable on FBAR.
Yeah.
Okay, when I send in my FBAR and 8830, I do not always have information from the foreign bank, so I have to guesstimate the maximum balance. Am I better off over-reporting? Does over-reporting put me into the knowledge offender category?
Yeah, if you're not sure of what the exact balance is, it doesn't hurt to estimate because truly, again, this is not a tax form. There's no tax that comes due from this. It's just a matter of doing your part to report that you have assets abroad.
Another question about WISE. If you use WISE to transfer money between a US bank and a Portuguese bank, do you have to report your WISE account on an FBAR?
Yes. So if the WISE account is you have a euro account, you have a pounds account, that would be reportable on the FBAR. And interestingly, if you're transferring it from one account to the other, you may be double reporting the same number, which looks funny. You may look like you have a lot more money than you really do, but just naturally the mechanics of it, you are required to report the maximum of all accounts.
Yeah, that makes sense. I think with WISE, with all these things, it's better to over-report than under-report, isn't it, in terms of the accounts rather than amounts? Definitely. If you're not sure, include it, I would have thought. Okay, I will be living in France full time, but I will maintain a US address for banking purposes. Which address should I use to file my US taxes?
Great question. To file your US taxes, you should always use the address where you would like to have mail delivered, because that first page is going to be your mailing address, more important than anything. Yeah.
And if you, for example, used a US address, it doesn't prohibit you claiming tax credits, the foreign earned income exclusion?
No, it will not prohibit you from doing that, mainly because when you're making those claims, you will report your address, your foreign address, on those forms, which is understood to be different from the address on page 1.
Okay, we've gone over the hour. There are a lot of questions still. I'm just going to grab one more. As I say, Katelynn will be back in an hour's time at our next session to field more questions. So if we haven't managed to answer your question, stop back in and answer it again. But I think here's a quick, simple one to finish off from Rosemary. How do I get the status of my tax return?
That's a good question. And there's a few sites that you can start with. One through the IRS is Where's My Refund? It allows you to put in some of your information and see the status of the processing. The other options, you can call the IRS, and if you get through to an agent, you can give them your information and they can let you know the status.
One of the other ways you can do that is by accessing or creating a U.S. taxpayer account on the IRS platform, and those have historically been really, really challenging to access with a foreign address. It's actually almost been impossible in the past. Our director of client services actually works directly with someone at the IRS to allow our clients to access those accounts, despite the typical challenges of authenticating your identity, all of those things. So we have a direct link with the IRS that we're able to use to set our taxpayer clients up.